Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. You see, the challenge often is we spend our precious time going to work to get a paycheck in order to eat. We go to work, we make our money, and then we provide for our family. But imagine if money would make you money, giving you a little bit of more time to be able to enjoy the things that matter most to you, family, friends, engaging in a purpose greater than yourself. That's what the Everyday Investor Investment Show is all about, teaching you different strategies so you can have more time for those things that I just mentioned. Remember, when anyone offers you any type of an opportunity, any investment opportunity, always ask 4 questions to start. Number 1, what is the return on investment? 2, when do I get that return along with the money that I put in? Very important, because if somebody says the return on investment is 20%, and then they say you get that all back in 5 years, then really it's only 4% annualized. If you're happy with that, go for it. But you got to really make sure you know when that is going to come to fruition. Thirdly, what is the minimum investment amount needed? And fourth, you look them into their beautiful eyes and you ask them, what is the risk, the worst case scenario? If they can't tell you, run real fast. Super excited about today's show. We are going to be talking about, wait for it, we'll be right back. Coming up, we're talking to veteran investor Aaron Moore and how we can make money wholesaling.
As a young man just trying to learn about investing, how to get deals, I thought it was a great idea to buy these discounted properties. So I started with wholesaling, and then, once you know how to get good deals.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to Aaron, we're going to go quickly over to Omar Khan to learn what's happening in the stock market. Omar?
Thanks, Rav. Omar Khan here, guys, on the week with the market review with Theta Trading. Anyways, want to give you a little update on the market. It was a bit of a pullback last week, which is expected. The second half of February generally isn't the best for the market. Now, that being said, we've had a long run-up. Right, we've done really well for a long period of time. So what people have a tendency to do after a long run-up is to take some profits off of people, especially the names that they've got the most, okay? And that's probably a lot of what's going on right now. Corporate earnings are still coming in really, really good. That's a very good sign. The economy looks like it's going to open and recover. And hopefully the stimulus measures get past the United States very soon. But so far, so good. But I might, I wouldn't be surprised if you see a little bit more profit taking and then see the markets move up from there. But that'll all be dependent upon corporate earnings. How good are earnings going to come out? Anyways, back over to you, Rav, and we'll see you guys next week. Take care. Bye-bye.
Thanks, Omar. Talk to you next week. Aaron Moore, thanks for being on the show with me, my friend.
Thanks for inviting me. Pleasure to be here.
Yes. I mean, you make money in different ways investing, but one in particular, and that's making money wholesaling. I watch a little bit of Dragon's Den. I watch a little bit of Shark Tank. I think I understand what wholesale means. It's kind of, what we give it to, the stores, and then they sell it out as retail. But Aaron, what does wholesaling mean when it comes to real estate investing?
In real estate investing, wholesaling, we're talking about properties. I happen to deal with a lot of residential. I'm talking single family homes for flippers. Small multi-units, like say 2 units, 3 units for landlords. These are the types of properties investors are buying from me. But what I'm doing is I'm making the easy button for house sellers. So we're making the easy button sale. They press the easy button, we buy it. And it's basically, some wholesalers work different. For me, it's my company's going to buy your house any which way. We're going to offer that to our investor network, which which is what happens when we wholesale. Otherwise, we're buying it, which is, your regular, we might hold it, we might flip it. But the wholesaling part is when we immediately sell that contract, is you're selling the piece of paper, typically to another investor. And that investor is going to use it as a rental. They're going to fix and flip the property. They're going to do whatever they're going to do. Maybe it's their new home. Who knows? They'll do what they want to do. The point is, we already packaged this deal, this property. We have it under contract. So we have a agreement of purchase and sale with a purchase price, a closing date, specific terms. They're buying that contract. That's what they're buying. And they're going to do exactly what that contract says. And they're going to pay us a little bit of money for it. So we're the wholesaler.
Yeah, I mean, listen, I receive from, across my desk, I see, it's Rav, do you want in on this one? Do you want this one? And I look at the prices and I'm like, wow, I mean, that's, for lack of a better word, they're significantly discounted at times, in great areas. And yet I know, Aaron, we want to take care of the seller. We want it to be a win-win. So how does that correlate? Kind of bring that marriage to me where you're getting a great price from the seller, yet the seller is thrilled that you kind of came to, and I can't think of anything else other than to say maybe to the rescue, if you will. Like, how does that marriage happen? Why does the seller do that? I mean, I can think of the fact that there's no commissions. There's no 4, 5, 6% commissions. So that would be one thing. But what else?
Yeah, like when I first heard of this concept about buying houses at big discounts, like I didn't believe it myself. My background, like educational background and work background, I was an engineer, so I'm kind of a number cruncher and just the facts kind of person. But once I've been doing this for years, you quickly see there's tons of reasons why people are going to sell at a discount. A common one these days, COVID related, it's going to be like tenants are just a huge headache. They're staying for so many months. You can't kick them out. The courts are closed. So people are just losing money every month and they don't know the options of what to do. Typically it's your first time landlord. They have one property, maybe two, and they're in this terrible situation. They can sell it to us, of course, at a discount, but we're going to take on that headache and deal with it. But there's so many, like very common, of course, foreclosure. We get calls, the sheriff's coming today or a week from now. What can someone do in a week? Like they don't know the options, these fast options. We've bought recently as fast as 2 days. That's the fastest we've ever done. We closed, signed an agreement. The next morning, I'm asking my lawyer, how fast can we close this thing? Like I asked for 3 days. We did it in 2 days, which was great. So there's not that many options to close that fast, but some of your typical scenarios, it's, sheriff's coming, estate sales, people inherit a house. It's often a dump. It's a handful. And, like my mother, just a couple of years ago, inherited a house in Windsor. She lives, in the GTA. She inherited this family home. It's been in the family since the 50s in Windsor. She didn't want anything to do with it. Like there's yard maintenance. It really needs renos. There was some, my uncle who passed away was in the middle of some renos. So it's not a finished product. It's just a headache for my mother. She asked me, because she at this house in Windsor, she got one of a cash house buyer letter in the mail from one of these house buying companies, promising to sell as is and quick, and of course at a discount. And that's what my mom, that's the solution she wanted. In her situation, that's what she wanted. Of course, she talks with me, her son, who's all about maximizing the potential of the property. And I help her with renos and selling it and maximizing the value. But tons of people want the easy button. And it's up to them what they choose. We all know what to do if we want more money. You get a realtor, you clean, you stage, you fix things. A lot of people don't want that. And there's tons of situations and scenarios, to them, their personal situations, why they do not choose that. And here we are.
Yeah, I mean, being a former broker owner, over a decade ago with agents working with me, and what you just said is not a guarantee. You can give it the best exposure, you can give it the greatest presentation, but it's not a guarantee that it's going to sell quick. And there's all different reasons. So I hear you saying there's numerous reasons. I didn't think about the one where especially here we are in the early stages of 2021, COVID, obviously everything's in the favor of the tenant, and it's hard times. And so I have no comments on either way, landlord or tenant. But yeah, Rav could come in and assume a property from somebody who just wants to get out, and I'll assume those tenants because I know what I can do to help the tenants and help myself. And so that was one I didn't think of. But of course, yeah, somebody passes away, somebody has to, leave the country and is not coming back. Somebody, they collect stuff. Another word for that is hoarders, so there's many, many, many reasons. So Aaron, I'm wondering, do you keep some of these for yourself and your team to flip, or is it predominantly just wholesaling across the board?
Definitely. We keep a significant number of properties. The majority we do wholesale just because there's so much demand. But yeah, we've always got some fix and flips on the go, and I've built up a nice portfolio of rentals over the years. And I must admit, a lot of my wealth has built from the rental properties I've held for years and years. It's funny, you make money from wholesale flips and rentals. It's like the biggest money comes from those rentals, then flips, then wholesales, but it all adds up.
And, for your wholesaling business, you're spending a lot of money. I'm sure you're spending tens of thousands of dollars, finding sellers, marketing, so there's an expense there as well, correct?
Big expense with marketing. That, what, we're really a marketing and sales business. We have to get our name, the opportunity we offer out there to people and make our name known. So it's a lot of marketing. Yeah,
no, listen, I appreciate, like I said, I sometimes I can't get all developers on my show because, it's a healthy margin. I can't get all wholesalers on my show either. Not that it's wholesaling, and correct me if I'm wrong, it's not like it's huge, astronomical. You'll become a billionaire because it's a volume business, correct? You're taking a small piece and giving it to Rav to be able to do what Rav wants to do, the investor, and you're just taking kind of a small piece relative to what the property is worth. Yes?
That's right. We can have some large wholesale fees, but on average, it's a smaller piece of the pie. It's like when you're selling any house. Sometimes when I flip a house, I am shocked by how much someone pays for it in these hot, Toronto GTA markets. I'm shocked. It's the same thing will happen in wholesaling. Sometimes you'll be pleasantly surprised by how much someone pays. So you take those.
And you've been doing it for some time now. What would you kind of ballpark? What's the average, discount, would you say, from market value?
I'd probably say, roughly kind of 15%. We got
15%.
renos to factor in, but there's probably a good 15 sort of percent in there. Depends on the property, probably less for rental properties, a bit more for the fix and flip opportunities.
So if we take a 400,000 property market value, you're saying we may on average get that for 340,000 ish kind of thing.
Yeah, probably something around there. Yeah.
And then you decide based on your work whether you take 10,000 of that or 20 or 30, and then Rav takes the other. So let's just say, again, for number's sake, it's 400,000. You get it at 440. You give me the contract at 360 rather. You get it at 340. I get it at 360. You make your 20, and I get a property that's discounted 40 grand. That's kind of how it works.
That's right. Yeah, that's a typical scenario.
Okay, well, Aaron, listen, thank you so much for being on the show with me. We're going to take a quick break. We'll come back, and then we'll look at some numbers. And for those of you that are watching and looking to sell, Aaron's your man. For you investors looking to buy investment properties at a discount, Aaron's your man. Thanks for watching. Don't go anywhere. We'll be right back. Hey, it's Rav from Everyday Investor TV show. Super excited. After 17 years of being on TV teaching investing, we finally are having our very first workshop. It's the Everyday Investor Workshop, March 6th. It's a Saturday, 10 a.m. to 4 p.m. My good buddy Ray Ostrander will be doing some teaching along with me. You don't want to miss it. Make sure you register at everydayinvestor.com.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rav. Welcome back to Everyday Investor. Talking to my friend Aaron Moore on how we can make money wholesaling. Before we get back to Aaron and the numbers, let's go to our mortgage specialist, Kyle Ford.
Thanks, Rav. Today I want to talk about intergenerational mortgage planning. When I use this term, people often think parents co-signing for children. Though that could be a great strategy to help get your children into the market and potentially out of your basement, when I use this term, I'm often talking about children co-signing for parents. Now, what does that mean? By adding your children to the title of your house in markets where you've seen great appreciation and you maybe can't access that equity, adding that additional income may give you additional borrowing power. This strategy may not be for everybody, but I've seen incredible success with families who have combined their resources in order to get more borrowing power and more access to capital. As always, be sure to reach out to your accountant, lawyer, and investor-focused mortgage team to help you structure this the best way possible. Thanks, and back to you, Rav.
Thanks, Kyle. Talk to you next week. Aaron, again, my friend, thank you for being on the show. So let's just kind of break down one of your recent wholesaling where you got the property from the seller and you gave it to Mr. Investor. So yeah, tell me where is this located? Where's this one located?
So this one's a condo townhouse in Oakville, so Oakville, Ontario.
Okay.
Smack between Mississauga and Burlington, but if we're GTA people, then we know this.
Okay. Town, yeah.
So we bought this for $460,000.
Okay, so you bought it for $460,000. Now, what would be, kind of the market value for the same home if it was up to speed?
If it was fully renovated, it ended up selling for $616,000. But the thing is, you don't know this when you buy. So I think I estimated high 500s at the time I bought it. So I estimated it's kind of high 500s, close to 600.
Oh, so this is one of yours that you kept and flipped?
No, so this is a wholesale deal, but when I communicate with my investors, I estimate the value. Like I tell them, I think it's worth high 500s or close to 600.
And the investor was glad that you were wrong. It was a lot more than what you thought. Okay, so you bought this from the seller for $460,000, and then what?
And then we wholesaled it. So we offered this to investors in our network, and we wholesaled this for $490,000.
For $490,000. Okay, so Kyle then, Aaron made $30,000 on this property, but there was a lot of work involved, generally speaking. Again, you talked about spending, offline. You said 6 figures you spend on marketing. Then we visit Mr. or Mrs. Seller. We have a conversation with them. And so you were able to do that for $460,000 and then sell it to Mr. Investor for $490,000.
That's right. And I've got a team of people doing this. So in this specific example, I remember because I took the phone call. JJ, my awesome sales guy, went to the property. He got the contract And then, so it's not me doing everything. I've got a team in place here.
Okay, so without the renovations though, just kind of like, let's call it just market value. The 460, if it was how, we would live in this home, if it was painted, if it was carpeted, whatever the case is, what would it have been? Would it have been 500, 520? Like
probably as is, it's tough, right? Because we're always buying based on the historical evidence, right? And the trend here is prices are just going up as the future goes on. So when we buy these things, I think the highest sale in this complex was 515 and better renovated than this one. So we don't always know.
Even if it's, let's just say 510, Mr. Investor's happy because I got a property, $20,000 discount.
That's right.
That I'm looking to flip anyways.
And we know we can make it nicer and increase the value.
Yeah. And so in this case, I mean, you just happen to know when he was done, he sold it for what?
616,000.
616. And most of the time, that's not really, your business. You got it for 460, you sold it for 490, you gave him some advice of what you think it would sell for, and he happened to do it for 616. In this case, do you know how much he spent for rentals or no?
I don't know exactly, but I know it was a short rental. This investor does do a lot of the work hands-on himself, so it was not a big rental. So I estimate, I don't want to, tell the CRA what he made, but roughly, let's say 60K was probably his profit.
60K is profit. In how long?
I want to say it was only about 3 months, like in and out. So, it was, I think, a 5 or 6 week reno, him doing some of the work himself, bringing in some other people. Yeah,
I think the average Canadian salary is 50K plus. And so he made, 60K, we're guessing, in about 3 months. But we don't have to guess because you do some of these. So you're going to show us one of yours?
Yeah, I'll go through one of my flip examples.
Okay. And this is a more recent one?
Yeah, this was just late last year, so a few months ago.
Okay, so a few months ago. And where's this?
This is in Bowmanville. So
okay.
We're going to the East GTA now, from west to east.
And this is why you spend money on marketing, because I don't think you're driving from Bowmanville to Oakville every single day. There's a method to your madness in terms of marketing, and people pop up everywhere. I mean, where's one of the furthest away? If we're in the GTA here, where's the furthest that you've done? I mean, I know you said you helped your mom out in Windsor, but
yeah, that wasn't from my advertising, but we've done Aurelia, like Barrie, Lotston Barrie, Aurelia, Niagara Falls, kind of Cambridge, Kitchener, out to Cobourg, Port Hope, Peterborough. So yeah, we really covered the GTA plus more.
Okay, so how did you feed your family on this one?
So we bought it at 540,000, and we flipped this house. So we renovated it and resold this one.
So you bought this at 540K, and again, not with your renos, but just a little bit of lipstick. What would this be market value?
Sometimes it's hard to say, but but probably would have been over 600, I think.
So 600K plus.
This was actually a rural property on a couple acres. So, the values of these have been changing dramatically due to COVID and just the shift in what people desire. So this is definitely a rising value here.
No, but again, because of your expertise and your marketing, you got a natural lift, naturally, of $60,000. Now, let's not use any down payments, and let's just suppose you bought this cash. I know you're an investor. You didn't. You probably used your HELOC or somebody else's money and did a joint venture or whatever the case. But let's just say you bought that cash. What was your renovations plus closing costs?
I believe it was under 40,000. So I want to say 37 from my memory.
Well, let's just say 40. So 40K. So now you're in for $580,000, and don't give me the price yet. How long did this take before the new purchaser bought it from you?
It was about 4 months in and out. So close to close was right around 4 months.
4 months. Okay. And what did you do to this property?
We did a substantial reno, new kitchen, definitely a major painted inside, outside. So significant interior reno, but we didn't redo everything. We kept some bathrooms that were decent and kept some flooring that was decent. So.
Yeah, I mean, and this is the other thing where skill matters, mindset matters, because if I didn't, know about the investing game, I'm saying renos and closing costs were only 40 grand. How are you doing a kitchen? How are you painting? It doesn't seem like a lot, but that's where you have to know what to do and where to find the help. And now, do you do a lot of this on your own, or do you have a team that helps you?
I definitely have a team. I'm not good with renos, but that does remind me. So renos, and plus it was just the renos that were on 40K. So about closing costs, so land transfer tax, paying a realtor, that's another 40K. So the renos is 40K. There's another roughly 40K.
Got it. So that brings me here to 620. So you're in for 620K. Thank you for that clarification. Okay, so what's the drum roll, please? What did you sell for?
So we sold it for 720.
720.
Yeah, 720.
Okay, so it sold for 720K. And I should be good at math. I'm Indian. So let me see, 720,000 minus 620,000, $100,000. I'm just playing around, but it's because it's exciting, Aaron. That's the reason why we do this show. And even if I didn't know how to do any of this, in fact, I don't know how to do any of this. And so I split this deal with somebody who did know how. So let's say I was the money, they were the know-how. We both get to make $50,000 in 4 months. And so that's why we do this show, and for people like you to come on and to be able to teach us. Now, why did obviously we can see why you did this here, but why did you get into wholesaling and not just stick to this and buy properties from wholesalers? Or is that how you started and then realized, hey, I can do this myself?
Well, how I started, I started with a couple rental properties, but then I did go into wholesaling first. This is over a decade ago. As a young man, just trying to learn about investing, how to get deals. I thought it was a great idea to buy these discounted properties. So I started with wholesaling, and then once you know how to get good deals, you start deciding to fix and flip some, because you can keep a bigger chunk of the profit. So you wholesale some, you fix and flip some. And for me now, like, wholesaling is how I can scale and grow. It's just, I could scale and grow a fix and flipping business, but it's just easier. And it's just what I want to do right now, is to grow the wholesaling side of my business.
Listen, I love this. Love you coming on the show. Thank you so much for doing it. I'm going to say something to you that I probably shouldn't say, because it's not the best investment strategy. You should go and invest where the numbers are best, right? And so in different areas. But I will say this, just because I'm a little lazier, if you find a deal like this in the promised land of Brampton, Ontario, please let me know. But Aaron, thank you so much for your time. Thank you so much for being on the show.
Thanks for having me. Pleasure.
And thank you, viewers at home, for watching, or for those listening via podcast. Without you, we would not have a show. Make sure you tune in next week, same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.